traders, welcome out to your trading room, getting prepared for the week coming up, which will be February 5th through the 9th. Corey here with you, excited to be here as always. So we're going to go through the markets and talk about the week that was. What was happening? We had a Fed meeting. We had some different things going on. We'll talk about the current market conditions, what sectors, what ideas make most sense, and we'll always highlight some individual stock and option trades. We're going to highlight a few today that I think are pretty enticing.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
All right, so as we look at last week and tie a ribbon on it, markets pushed higher once again. One of the things that happens when you go to new all-time highs on an individual stock basis or on a market basis is you usually continue to make multiple new highs. In other words, prices expand to the upside. Now, will we eventually have a deep pullback and a bear market and so on? Yeah, but not, you don't just pierce to a new high and then immediately go into a bear market and a recession and so on and so forth. That's just not how it's likely to work. So, yeah, we've made new highs recently within the last couple of weeks. You'll probably expand away from that. You'll get some pullbacks and then you'll expand further and so on and so forth. And that's kind of how markets continue to drive to higher prices long term. The Fed kept rates unchanged. Powell suggests that a March rate cut is unlikely. And with this morning's robust jobs data, they say they're data dependent. March is pretty much off the table. Even the odds of May and June and some of those time periods have also taken a hit this morning. So the market's coming to the realization that the economy's strong enough. The Fed's going to be slower to cut rates, and they're adjusting. There was a huge adjustment this week. Economy is showing some real signs of strength. The job numbers this morning blew away expectations. Average hourly earnings up 0.6 versus the 0.3 expected. Jobs gained 353,000 over an expectation of 187. So just absolutely blew the numbers away. As you take a closer look here, the Fed, again, not raising rates, keeping it unchanged. And the big news around that statement was not likely to cut rates in March. And then we start to see the why, the data coming in robust and massively beating expectations. Now, as we look at the market, pretty strong week. S&P, Dow, NASDAQ, all up 1.5-ish%. The Russell slightly lagging at just under 1% gain. Oil was clearly the outlier. Oil had a really rough Wednesday post-Fed when the Fed said they weren't likely to cut rates, and you saw the US dollar move. You saw oil prices move lower, and it was like they moved lower sharply in tandem to end the week. Now, as we look at markets a little more closely, as I said, once you make a new high, and this is something that I've emphasized the past couple of weeks, as you break out to new highs here, you're likely to continue to expand and make new highs and new highs and new highs, right? We're not evolving around a center line. It's not like stocks normally go like this long term. They don't do that. Stocks and assets in general are moving in a way that's like this. Sure, there will be bear markets and there will be huge economic downturns, but the stock market consistently goes to new all-time highs, as do other assets. We would anticipate that housing prices will continue to rise. Do I think it's going to be more expensive for my kids and grandkids to buy a home than the prices I'm paying today? Of course it is. Is it going to cost them more for a can of Coca-Cola? Of course it is, right? It's going to cost them more to buy a share of the S&P 500. So we're making new highs. A lot of people think, oh, well, if you make a new high, that should be a sell signal. It's actually quite the opposite. It's not good to buy at new highs, new all-time highs. It's great to buy at new all-time highs because usually that's that expansion period. Of course, a bear market will come, but don't expect it immediately. Don't expect it tomorrow or something like that. You've got to be realistic about expectations. NASDAQ 100, same dynamic, broke out to the upside, continuing to progress. If you were, you know, nitpicking here a little bit, there was a little bit less robust upside in the NASDAQ this week, even with some companies massively beating expectations. You saw Meta, you saw Amazon both go sharply higher, but on the flip side of that, you saw Google go down, you saw Apple go down. So tech took a little bit of a step back, I would say, this week, even though still bullish. I wouldn't be shorting it. It just clearly took a little bit of a step back from its extra strength that it had. So the week that was, Amazon, Meta had a huge week, Nvidia, fantastic outperformers, Google lagging, Apple lagging, and Microsoft flat. I was highlighting Microsoft as a neutral trade idea, and notice how good that was as a neutral trade idea versus the others that moved quite robustly. Down here in the bottom, the regional banks and insurance companies really got hit. You also saw some lagging in performance in energy. So if you were looking industry specific, look at those regional banks as a little bit more of a bearish area in the financial sector. Will the end of this rally be a blow off top? And this is what often happens when a market move has been hated and discounted and people making excuses for, oh, it shouldn't be going up, it shouldn't, wouldn't, couldn't, but it keeps doing it. Normally there will be a big expanded blow off top, meaning you will turn vertical and sharp. It'll be running about 1,000,000 miles per hour. It'll have a massive bullish candle up here that kind of punctuates and puts a big exclamation point at the end of this run. So watch for some blow off top phase. Now that could play out over the process of a few weeks. That could be a lot higher, but I would anticipate that a big short covering kind of smack your face rally could be the finishing touches on this. So if you start to expand to the upside and get really stretched away from moving averages and just go vertical, then all of a sudden you know, okay, that's probably that final ninth inning finishing move, and we can have big consolidations or big corrections that follow that. But the trend remains bullish. Earnings have come in pretty solid. Next week, we've got Caterpillar and McDonald's on Monday, Amgen, BP, Gilead, Eli Lilly, Toyota Motor, Tuesday, Alibaba, CVS, Disney, PayPal, Uber, ConocoPhillips, and PM. Is that Philip Morris? I'm trying to remember who that is. They used to be part of MO, which is Altria Group. I think PM just stands for Philip Morris. I'm doing these by memory. Honda Motor Company, Pepsi, and so forth. A lot of companies to report next week. So this week, we've got the RBA statement coming out on Monday if you're into currency trading. Here in the U.S., we've got some Fed speakers on Wednesday. We've got more Fed speakers, but there's just really kind of a quiet week for economic results. So this next week, I would say, you know, in fact, probably Sunday and Fed Chair Powell speaking might be the highlight of the week, and that's while markets are closed. So there's not a lot there in the coming week from an economic standpoint to do much to the markets, and that means we'll just trade technically, and trading technically means, well, we're bullish. We're above the 20, above the 50. Those are sloping upward. If you go crazy vertical, then that's probably putting that finishing touch on this trend. But other than that, I think it's steady as she goes. So let's break down the sectors here. So as we come in and take a look, you'll see there are some haves and some have-nots certainly in this sector. Rotation, there's some negatives and some positives. For the week, consumers, the big outperformer, communication services, healthcare and industrials lagging, real estate, energy, Even technology, just basically flat on the week, certainly underperformed. And that's why I said technology wasn't quite as robust as what it had been recently. So let's dive in a little bit more closely to each one of these sectors. First, XLU, we're below a 20, we're below a 50, and we've got downward slope. Not great price action, really a bearish setup, a bear rally short setup. We think that's still in the negative -2 category, something that's more bearish certainly than bullish overall. If we look at communication, quite the opposite. You're above, trending higher, breaking out to the upside. That's about as bullish as it gets. Nice upward slope. The only concern now would be kind of that exhaustive type of price action could be being had, but I think it's in pretty good shape. Real estate, again, kind of consolidating. I would say moving average is flat, but we're trending below them. We're going to give that a -1 in that you're below both moving averages, but those moving averages are sideways overall. Healthcare, still bullish, broke out to new highs. Healthcare looks good, acts good, still trending higher. We've got that in the bullish category as well. If we come over here to industrials, same thing. We've consolidated in industrials for multiple weeks, and this week was the breakout. That thing looks fantastic. A fresh new breakout in industrials. Certainly an area that one could look for bullish trades, and we'll do just that. We're going to highlight an industrial trade for the upside. Financials, a little bit of a quiet week, but you had within financials, regional banks underperforming, but the rest of the financial sector besides regional banks and insurance was doing really well, big money center banks and so on. So a little bit of a mixed bag, but still bullish. Little pullback this week and starting to pivot back up. Consumer stocks, yeah, you've moved above the moving averages, but we've got a bearish crossover in the moving averages and sideways slope. We're going to put that in the zero category. I'm not sure we feel strongly about that one way or the other. Next, we've got technology. And as I said, even though tech is still trending higher, make note that it's not making new highs, that it's pulled back and it was basically flat on the week when virtually every other sector was doing well. So tech, we're going to give just a little bit of a step back, not quite as bullish as it has been previously. Materials, below or in the middle of those moving averages, but some downward slope in that 20. But I would give the benefit of the doubt to the bears on this one. Mildly bearish, just mildly bearish. And then energy, mixed picture, above the moving averages, but some downward slope in them. I'm going to put that one in more of the zero category. Notice materials was below at least one of the moving averages. Energy is above both of them. That's why we gave materials just a little bit more benefit of the doubt of being just acting a little more negative. So as we stack them up, communication services still the big outperformer, followed by financials, healthcare, and industrials. And industrials is the newest breakout. Tech took a little bit of a step back. On the bearish side, real estate and materials, and then utilities clearly underperforming every other sector. So as we look at possible trades, we're going to highlight from that list. First, utilities, which is the most bearish sector. Here's Dominion Energy. If we were to take a look at this chart, you can see trending below the moving averages, and this is just a bear rally short. You basically made new lows, you rallied up, we're pivoting, making a lower swing high. See how this one, lower lows, lower highs, lower lows, lower highs. See the downward sloping moving averages, see the bearish crossover, see the bearish Harami candlestick pattern, everything pointing towards further decline. So the trade idea we were highlighting, just a vertical spread. You could buy the 47.50, sell the 42.50 for about $1.65 debit. This is a slow enough moving stock that it probably won't be able to get to that target. So are you going to make the max reward? Probably not, but you can make a good portion of that. And this spread was already in the money. So it's just kind of a spread where if we go this way, we'll lose a bit. If we go this way, we'll make a bit. You're probably not going to have max loss, and you're probably not going to have max reward just because of the nature of its a lower beta stock. But nevertheless, excellent reward to risk, and probably a trade that you would simply close out on February 16th expiration. And if it falls lower, which is our bet, that it will be somewhat lower than where it finished this week, we should make some money in that trade. Next, we've got communication services as a trade idea. Here's Verizon. So notice breakaway gap. And let's take a little closer look here. Breakaway gap. And then high basing pattern. So the chart, certainly more bullish. If we look at Verizon as a trade, you could buy the 42.50, sell the 44. This is very similar to the prior trade where we could lose the 45 cents. We could make up to 105. That's a really good reward to risk ratio. Reward is about twice our risk there. And are we going to get all the way to 44? Maybe not, because it's a slower mover, but I think we can certainly be higher than here. And 44 is not out of the question by any means. So excellent reward to risk. We're betting higher than where it finished here by 2 weeks from now. And then last but not least, as a trade idea, we talked about the industrial sector was the newest sector to break out. Well, here's Caterpillar. Caterpillar broke out prior to the sector, which exhibits relative strength, and we think can continue to push to the upside. Now, this stock finished on kind of the highs here, and so you might, depends on what Monday brings. If it's still up here, you might have to pay a little more than this price. If it pulls back just slightly to start Monday, you could pay a little bit less, but basically we're looking at a February 16th, buy the 315, sell the 325, pay about $4, make a $4 risk for 600 reward. If we're below 315, we'll lose $400. If we're above 325, we can make $600. That's the risk to reward. And this one out of the three is the highest beta. So it'll move 10 points over the next 2 weeks. If it's a bearish move, well, we were wrong about the trade. If it's a bullish move, we can be in great shape in Caterpillar. That chart, again, just looks fantastic in terms of the breakout, the relative strength, the moving average just starting to turn upward. This should run for the short term to higher levels, a la kind of what happened back here when the moving average started to turn up, when the stock just started to break out, and you saw more follow-on buying. We'd anticipate something similar to that effect in place. So the uptrend persists. The possibility for a big blow off top, kind of a finishing, tie a ribbon on this rally is in place and is intact. Use proper trade and position sizing, risk management, all of those things are absolutely critical. We'll continue to send out market roundup recaps throughout the week. We'll have another trading room next weekend to finish off this coming week and talk about, well, how did we do? Did things play out as anticipated, and so forth? Kind of a quiet week on the economic front, but we'll still have earnings trickling through, and we'll have plenty of Fed speakers, starting with Powell on Sunday night. Hope you enjoyed today's trading room. Have a great weekend, and we'll see you next week. Goodbye, everyone.